Good morning and welcome. You're watching Business Today, just after 9. Time to get you all that you need to know as we head into market opening. Let's take a look at the headlines. Markets set to gain ground after yesterday's 140-point fall in the Nifty. Wall Street ending higher with tech and industrial shares driving gains. Asian markets are also up after this week's nervousness in the Japanese bonds market. Bitcoin rallies up $8,000 in just 2 days. New IPOs once again making headlines today. 3 main board IPOs led by Meesho open for subscription. E-commerce platform Meesho is raising more than 5,400 crore rupees. It's already raised 2,439 crores from anchors investors. Other IPOs include aerospace component manufacturing company Equus and the 300 crore rupee issue of Vidya Wires. There could be some big changes in store for mutual funds and brokers in the next SEBI board meeting exactly 2 weeks from today. An overhaul could be in place to improve transparency in costs and charges levied by mutual funds and modernize regulations, some as old as 33 years. These regulations have continued to govern the broker community. Big boost for Dr. Reddy's. The Delhi High Court rejects Novo Nordisk's plea, allows Dr. Reddy's and OneSource to manufacture and export weight loss drug Semaglutide to countries without patents, but bars its sale in India until March 26, till the end of Novo's patent. Semaglutide is the wonder drug behind Ozempic and Wegovy. RBI's interest rate deciding panel, the MPC, begins its 3-day meeting amid record low inflation, 18-month high GDP growth numbers and a plunging rupee. With economist polls divided on a rate cut, resilient growth and currency pressures may push the RBI to hold rates steady on December 5th. All right, let's take a look at the setup this morning. Just a few minutes to go before we open for the day. And while we did see some recovery overnight on global indices this morning, what are we in store for, and could we see further selling on the downside? Gaurang Shah, Senior VP Geojit Investments, joining us. Gaurang, it has been tough to stay at those all-time high levels. So rather than moving upwards, we do seem to be finding it difficult to maintain ground. Do you anticipate further selling as we head into December, further into December?
Hi, Baba. Thank you so much for having me on the show. Good morning to all the viewers of India Today, to you and to the entire team. A small disclosure, because we might go into stock-specific coverage also. So all recommendations that I'll be sharing this morning on your show, Abba, these are part of our fundamental research team recommendations from a long-term point of view. Our company, Geojit, we do not have any personal investments, no financial interest, no conflict of interest, and no personal interest. But we give recommendations to our clients on similar lines. They might have their investment interest. So I think it's been a proven track record, right? Every time the market has made a new all-time high, there comes a time post that new all-time high that we go into consolidation mode. And rightly so, we did manage to cross over 26,300 on Nifty spot. I think it was last week. And now that we've done that, we are consolidating. Nothing to complain about, to be very honest. Yesterday, whatever happened in the market, I think it was well accepted. It gives opportunity for new investors to come in. Short-term traders would have definitely taken this opportunity to book out, given the fact that we had hit a new all-time high. And foreign institutional investors continued to be on the sell side last week and even beginning of this week. Rupee hitting a new low against the dollar, 90 rupees to a dollar is also something that market is a little bit concerned about. But on 5th of December, we have the credit policy. On 10th of December, we have the Fed meet, wherein Mr. Powell will announce his view. And on 5th, we'll get an outcome as to whether we're getting a rate cut. And one silver lining that I see in this entire little bit of overhang is the visit of honorable and respectable president of Russia, Mr. Putin. I think that could open up plenty of positivities. But Abba, I think this market is just consolidating. We are possibly preparing ourselves to move upwards north after a brief period of consolidation.
Well, talking about Putin, I think it's the defense talks that are waiting to see what comes out of that. On the political front, we'll leave that conversation aside, Gaurang. But yes, defense is going to be watching what comes out of that big meeting. We've also got the RBI meet on Friday, and we'll discuss the outlook there with Gaurang in just a moment. We're just counting down to open. The rupee also hitting 90 now to the dollar. It's crossed that mark, and that's for the first time. So remember, we've been seeing the slide on the currency today, this week, and today crossing that 90 mark as anticipated. Lots of pressure on the rupee on the back of the uncertainties surrounding the trade deal, import hedges that have taken place, and the latest set of manufacturing data that's come in, trade data that's come in as well. So the rupee not looking so good this morning. Of course, great for IT stocks, so keep an eye on them. Whole host of brokerage views coming in. We've got Citi on HDFC AMC, neutral there. That's an upgrade. Citi on RIL, that's a buy rating. We'll talk about the target price in a moment, but let's pull up the major indices for you and see where they're trading on opening bell. We've got just a marginal uptick, continuing to be flat to sideways right now on the index. The Nifty Bank also flat at the moment. I'll try and pull that up on my screen there as well. We've got some of the gainers and losers for you. IT continuing to see a bit of an uptick because, like I said, the rupee is seeing pressure, and the one pocket that does well on that front is IT. So we're seeing a constant uptick there. Dr. Reddy's on the boost coming in for its drug is up about 0.6%. M&M, Asian Paints continuing to look strong. Auto, of course, altogether has seen a decent run up this week. Hero continuing. We'll pull up Maruti as well because lots of interesting commentary coming in there. And metal majors have also been moving. SBI, Sun, Grasim, some of the other gainers there. Advanced decline ratio seems to be intact on first glance. Let's also pull up some of the losers, see where the pressure is. Advanced decline at the moment is tilted towards advances as we speak. Nifty Bank is just a little in the red right now. But let's just see where we have some pressure. BEL, Shriram Finance, Coal India, HUL, NTPC, some of these names, Kotak Mahindra, not any deep cuts, so to speak. ONGC sitting out, some pressure there given what we're seeing in crude prices. JSW Steel, Kotak Mahindra Bank, some of the other names on the downside. But the cuts are limited, and we are continuing to see a little bit of traction on the upside as well. Nifty, though, just while I was saying that, Gaurang has slipped again into the red. So clearly it is going to be a little difficult to hold those levels. We're watching out for the RBI commentary, and maybe this could be something that could give a fillip to the rupee. We've seen phenomenal GDP numbers. We're seeing really low inflation, but still awaiting commentary from the RBI on rate cuts, of course, as well as overall some kind of news on the trade deal, because that's also what's keeping pressure on the currency.
Well, I think that's a major cause of concern, Abha, because uncertainty has led to, exit by foreign institutional investors, not only in the recent time, but from last year, October onwards. More so from April this year, there has been a lot of statements made by the representatives of both the country, that is India and US. US representatives have they are more eager to announce that peace deal rather than India. But as Minister Goyal has clearly mentioned, that India is not going to sign any trade deal under any kind of pressure, or if you're going to hold a gun against the forehead. So my sense is that let it take a while, Abha. We also want to have clarification about that tariff case in the US Supreme Court. If I'm not mistaken, that is still being argued. Outcome will be known. And if it goes against President Trump, then I don't know what situation US economy will be into. So this pressure is creating a little bit of problem. And there is a little bit of mixed view on 5th of December, Abha, that because rupee is at its all-time low, there might be a status quo as far as rate cut is concerned. This is some part of the market that feels that. I am of a personal opinion that at 0.25 basis cut is definitely on the cards. Statements from the RBI governor will be important.
Okay. All right, great. Let me bring in Shailendra Bhatnagar as well. Shail, just as we speak, the advanced decline ratio has tilted towards the negative. We're not seeing any kind of massive sell-off just as yet, but clearly there is pressure on the index on the downside. Meanwhile, Dr. Reddy's, as we speak, continuing to, of course, build on those gains with regards to that approval coming in for the drug that is behind Ozempic, and for it to be shared in countries where they don't have a patent for it. So that's a big one for Dr. Reddy's.
Good morning, everybody, and a warm hello to my very dear friend Gaurang. It seems that he and I are wearing the same colored tie, and as we all know, saffron is the color to be as far as the present dispensation is concerned. Be that as it may, the Nifty is back in the green. The advanced decline ratio is favoring bulls at the moment, 1362 versus 990. So that's a very, very big plus, and it's going to be auto ancillaries, autos, both four-wheelers, two-wheelers, and the IT space that's dominating the proceedings. Lots of strength and emphasis, TCS, two stocks that we had marked yesterday on the long side, as also maybe L&T, Mindtree getting into the show. And of course, I'll keep an eye out on Hyundai, I'll keep an eye out on TVS Motors, Minda Corp as well. Abha.
All right. I was trying to look through a whole bunch of stocks and news, and just to see if there are any other news makers that are standing out in the broader markets. And we'll try and pull up some of those as we look at some of the gainers and losers there. But let me bring everyone up to speed on SEBI's board meet, which is coming up on the 17th. It's shaping up as the biggest cleanup of market rules in decades, with mutual funds, stockbrokers, even the regulator's own officials under the scanner. From capping what funds can pay as brokerage to defining algo trading and tightening conflict of interest disclosures, a wide slate of proposals is on the table. The board is expected to decide whether to sharply lower the brokerage and transaction costs that mutual funds can charge outside the TER or the total expense ratio, scrap the extra 5 basis points over exit loads, and possibly move towards a simpler, more transparent fee template for investors. It will also debate new formal definitions for algorithmic and proprietary trading, pruning 3-decade-old broker rules, and act on a high-level panel's recommendations to force senior SEBI officials to make fuller conflict of interest and asset disclosures. Those are some pretty sweeping reforms that are anticipated there. Gaurang, what are you making of the agenda for the SEBI meet?
Well, Abha, I think it's only important to move with the time, to be very honest. And if there are certain rules and regulations which have become history, then they need to be redone, and possibly new regulation should be brought in. Outdated, overlapping regulations also creates a lot of problem for market. For the market as well as for the market participants and the stakeholders. So I'm glad that the SEBI chief has taken this view, and I think we'll get clarity as and when the announcements are made by the regulator. But moving with the time is something that is very prudent, and doing away with old, redundant, not so relevant regulations and bringing in new one clears the path for transparency and clarity and growth. So I'm definitely give a thumbs up for this thought. What is behind in terms of the blueprint and the changes, I think we'll discuss that once we have a little bit of more clarity, but it'll definitely help the markets.
Okay, I'm just trying to spot some active names in the broader market. Some of the auto, Inc. or tire names. You've got a Balakrishna Industries, you've got Minda Corp, up 4 to 6%. In paints and Asco Noble, Schneider Electric's up about 5% there. I'm just trying to hunt for some stars in an otherwise quiet large cap space. We've got Natco consistently has been moving, of course, so that one continues. UB seeing a little bit of action. Samvardhan Motherson Sumi again from the auto Inc. space. Hitachi Energy, again a little bit of capital goods action. Glenmark also has been seeing some mild moves lately, so that one's also continuing to see a little bit of an uptick coming in. So that's really what I'm seeing, just top of the charts there. But Shell, it is seeming like a quiet market so far.
Well, I think 26,000 has been defended by the bulls after 2 days of consistent selling pressure, which also included the weekly expiry. So let's build on to this. IT is flourishing. That helps the Nifty because you have 5 tech companies there: TCS, Infosys, Wipro, Tech Mahindra, and of course HCL Technologies. So that will take care of the Nifty. But strength in metals, strength in IT, strength in banks, that's what should be looked into. It's early times. We'll hope for better times on the Nifty during the day. Abha.
Okay, so that's Gaurang, you know Shell pretty well after all these years, and that's his way of saying he's very disappointed that there's not much more that's beating the trend, so to speak, right now. Let's cheer you both up. Let's pull up some of those auto measures, and they're of course consistently been doing well. Even if we're seeing a touch of red on the screen today, we're trading at 52-week highs. We're seeing great sales numbers and really strong commentary coming out of a Maruti this morning as well. What are your views currently on auto, Gaurang? Anything change in the last month or so, given the latest set of numbers that have come in? Would you also include some of the other majors in your portfolio?
So, Abha, I think auto will definitely dominate as we go forward. And the fact of the matter, Abha, is that even in the month of December, which is considered not so very optimistic month for auto sector because of the year change, a lot of people hold on to their purchases. I never understood that logic, to be very honest. If you buy a car in the month of December, then maybe in the next 1 month or 15 days, the car becomes 1 year old as the newer, rings in. That logic I fail to understand. Having said that, Mahindra & Mahindra launched a new EV. Last month, we saw a comeback of a fantastic legend from Tata Motors, Tata Sierra. That was a vehicle ahead of its age and time, to be very honest, when it was launched almost about 20, 30 years back, if I'm not mistaken, or maybe more. So, when you have automobile companies launching vehicles in November and December, it shows the optimism of these automobile manufacturing companies with respect to what lies ahead. Government's effort and the PLI scheme will also help as you go into the future. And there is one particular thing that I am personally very, very optimistic about is making India a global manufacturing hub. From sourcing from rest of the world to sourcing to the rest of the world. I think that's a big, big game changer for the auto sector. So, honestly, as Shell was saying, every day, every 1 hour, every 2 days or every 3 days, don't read too much into some small correction and consolidation. It happens. This is a part of the market. Similarly, for certain sectors, Abha, like auto was one of the most untouchable sectors when that semiconductor chip issue and supply side constraints happened from China. But look at the present scenario. I think we are doing much better in terms of taking care of all those negativities. Yeah. So auto is here to stay, and I think it will be in spotlight for all the good reasons.
All right, Gaurang, thanks so much for joining us this morning. Let me also get your view from market veteran Sunil Singhania, who's rejected all talk of markets being overvalued, and an exclusive conversation with Business Today's Ridhima Bhatnagar. He discussed India's resilience, sector positioning and outlook.
India has always traded at a premium to the emerging market and some of the peer group countries like China. Towards the end of 24, that valuation premium had shot up to 40%. On PE basis. I think that has now come back down to around 14-15%, which is just slightly higher than the 10-year average. And India will always trade at a slight premium. One, it is democracy. Second, the demographics are in our favor. We are one of the youngest economies. Third is the growth rates here are higher. The return on equity profile of Indian corporates is higher, and therefore India deserves to trade at slightly higher PE. So I think at these levels, we are reasonably priced, and any long-term global investor also cannot afford not to have exposure to India.
Do you think we will continue to be the global hope trade, or the IPO-driven frenzy could overheat the markets?
So in markets, all segments are important, and from time to time there will be always some segments which will become cheap and some segments where there will be a little bit of, I would say, overvaluation. Maybe to some extent some IPOs are a little expensive, but at the same time IPOs are necessary. See, this economy moved from 1 trillion to 4 trillion, some sectors contributed. From 4 trillion to 8 trillion when we move, there will be very different sectors which will contribute. Even if you see last 15-20 years, IT services, pharma, hospitals, they were never there as key listed plays. Now, if you see, they are big components. And I think some of the new age companies which are getting listed will always have that moat, and some of them will really grow very, very big. So I think we will have to also look at IPOs, because that will be the way of investing in some of the future companies, early. At the same time, I do agree that some IPOs are priced a little bit expensive, and maybe some IPOs might not deserve to be even have a look at it. So I think it's the investor to do proper research and look at it. I think from a market perspective, there will always be these kind of things. So now the investor has to do what is within their philosophy and the risk-taking ability.
All right, that's where we leave it on the show today. Thanks so much for watching. Do stay tuned. We'll be back at market closing at 3 p.m.